a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about ETFs that focus on mega cap technology stocks. Now, these companies, most of them reported results last week, and their results were much better than feared. And we have already seen that these stocks have done quite well this year. In fact, the market rally has been quite narrow this year. The gains have largely been driven by these 5, 6 huge companies, and they added to their gains last week. So Apple is the only one which hasn't reported among biggest technology stocks. Apple will be reporting this week, and before they reported results, many analysts were talking about macro headwinds and stretched valuations due to this year's rally and decline in earnings estimates, etc. In fact, hedge funds were betting against these stocks. And according to Financial Times, hedge funds lost $18 billion betting against tech giants and their results. So results were better than feared. These companies have done a lot of cost cutting. They have carried out huge layoffs. And then results are expected to get a boost from artificial intelligence, which has been, in focus this year, the potential of artificial intelligence. So let's take a look at the results. So Microsoft beat expectations on the top and bottom lines, and their guidance was also better than estimates. They said that AI will be driving their revenue growth going forward. The stock is up 29% this year and has been a big beneficiary of AI boom because of its focus on Chat GPT. Then Google parent Alphabet, their results were also better than estimates. Their cloud unit reported a profit for the first time, and the company also announced a share buyback of up to $70 billion. The stock is up about 21% this year. Then let's talk about the e-commerce giant Amazon. Their results were also better than expected, stronger than expected revenue, thanks to strong growth in cloud computing and advertising businesses. So the stock rallied initially, but fell after they said in the conference call that their cloud growth is slowing. The stock is up about 23% this year. Meta has been the standout star this year. So Meta was beaten down last year, but the stock has surged this year and is up about 93% year to date. Last week, the stock surged about 15% after reporting better than expected results. And the company has actually laid out about a quarter of its workforce. And CEO Zuckerberg called 2023 the year of efficiency for the company. And they talked about how artificial intelligence will help their various applications, and did not talk a lot about the metaverse, which appears to be far in the future. Artificial intelligence gains may happen in the coming years. Now let's take a look at some ETFs that investors could use to bet on mega cap tech if they want more concentrated exposure to these stocks, because we know that all these stocks are not included in the technology sector funds because Google and Meta, they are in the communication services, and Amazon is in consumer discretionary sector now. So let's take a look at some ETFs by going to the quote page on Zacks.com. So the first one I'm highlighting is QQQM ETF, the Nasdaq 100 ETF. It is the cheaper version of the ultra popular QQQ ETF. QQQ charges 20 basis points. This charges 15 basis points and has already gathered 9.2 billion in assets. And like QQQ, it holds the 100 largest non-financial companies listed on the Nasdaq. So if you want to learn more about the ETF, you can read our research report, articles. Using the link, you can go to Invesco webpage for the ETF, look at holdings, other details. So Microsoft, Apple, Amazon, Nvidia too, which has done so well this year, Meta and Google parent Alphabet. These are the top holdings in the ETF. The second one that I'm highlighting is by Vanguard. It is cheaper than QQQM2 and very popular with 12 billion in assets. It holds the largest growth stocks in the US, quite cheap with just 7 basis points expense ratio, and holds 96 stocks. So again, you can go to the quote page on Zacks.com, and using the link, you can go to the Vanguard webpage for the CTF and see what it holds. 96 stocks, as I mentioned. A lot of exposure to Apple, 16%, then Microsoft, Amazon, Nvidia, Alphabet, and Tesla in the ETF. Now, both these ETFs, these mega cap tech stocks account for almost half of the portfolio. And in addition to these stocks, you will also get exposure to Nvidia and Tesla, which are, investors love both those stocks as well. The last one that I'm highlighting is a relatively new ETF, just launched about 2 weeks back. It provides concentrated exposure to the just 5 stocks that we talked about, FAMG stocks. So Facebook, Apple, Alphabet, Microsoft, and Amazon. It provides equal weighted exposure to those stocks. And as I mentioned, very new, 1.6 million in assets. So I would recommend caution if you're interested in this ETF. Definitely use a limit order or wait for some time until it gathers more assets. And this is reasonably priced at 29 basis points. But you can go to the quote page on Zacks.com. I, in fact, did a podcast with the provider, so you can learn more about the ETF. You can also go to Roundhill webpage for the ETF. So as I mentioned, equal weighted exposure to just these 5 stocks. On the last slide, I have the comparative performance versus the S&P 500 index. I haven't included Big T because it's so new. But yeah, it surged last week after those companies reported results. But the other two are up about 21% year to date versus S&P 500's gain of just a little shy of 10%. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. And also make sure to subscribe to our YouTube video channel so that you do not miss any episode. And I will see you next week.